Welcome back. This is Market Making Monday on a Tuesday. Yes, Market Making Monday on a Tuesday. So, those that don't know, and I'll explain in a bit why it's on a Tuesday. Long story, short story. Make a long story short. So Technical Tuesday is pretty much me breaking down the charts on a weekly basis, giving you guys insights and technical analysis of the market and trade ideas, my trade entries and exits on the market. So it's pretty much a pretty basic overview for new and intermediate traders that want to learn and want to improve on their skills. So you're in the right spot if that sounds like something you need. So let's get this video started. So why am I doing Market Making Mondays? And this is episode 25. It's been a while since I put out any videos. So yesterday I actually recorded Market Making Monday episode 25, and it's just been a whole lot of technical issues, computer wise, recording wise, like everything just seems to be going wrong. The whole video that I had just seemed like it just didn't want to upload. The editing was taking forever to upload, and then I had to do it all over again where I had to re-edit the video, and then the computer restarted, and then for some reason all that stuff was like deleted, and I had to upload it again. I said, you know what, I'm just gonna do it all over again just for you guys. I'm determined, and that's something you guys have to take in on your trading journey. You see, like, there's going to be so many obstacles in your way, but if you continue going, I guarantee you that at some point you guys will see success in the market and you guys will have consistent trades. And if you're following this channel, then you're definitely at some point gonna find yourself having consistent wins and being able to live that life that you want. So that's what it's all about, right? That's why we're all here, to learn how to trade and just to better ourselves in our lives. So let's get to it. Market Making Monday on Tuesday. And I don't know, I'm probably thinking about doing like a technical Tuesday or something. I might call it like the following day, technical Tuesdays. Technical Trading Tuesdays. So this is Market Making Monday / Technical Trading Tuesday. See, I just started something new right off the top. So you got to be innovative. You got to be able to go with the flow and don't let things get you down. You just got to keep pushing through it. So any wall that you ever see in your life, you got to just push right through it. Don't climb over it. Sometimes you can't climb over it. Sometimes you got to go right through it. That's a little bit of advice for you guys. So, all right. So as you can see, I actually already have a buy trade on. That was from yesterday morning, and I could go over that trade real quick for you guys. So my style overall trading is I could day trade, but I like to just short term swing trade because it's a little bit more easier for me. That's the thing too, you guys, after a while with trading, if you guys are not profitable, you guys really have to like know your personality. Are you able to hold trades, or are you a person that wants to like get in and get quick profits? For me, I noticed like with the day trading thing, I just hate trying to get in day after day, and then sometimes, you know, it's not that the greatest entry. Or so I feel like I finally found my style of trading, which is short-term swing trading. So enough of that, let me show you guys how I got into this trade. So on Sunday, the market made a short-term low, which is highlighted with the blue marker right here. So that's a short-term swing low. So we have a low on the left side and a higher low on the right side of this big low, this wick right here. So we call it like a 3-pin pattern. You could call it that. So once you see this, I'm waiting for the market to run that out on a Monday specifically. So my strategy is pretty much for the week. I'm looking for a swing low or a swing high to be taken the following day. And once I see that, that's my trade signal pretty much, with other things included with day trading. So day trading has helped me a lot improve this strategy because I know how the market moves in the mornings. So I just wait for certain things in the morning, and then I could execute my entry on a lower time frame based off the higher time frame. If that makes sense to you guys, I hope you guys understand that. So higher time frame to lower time frame entry, and then I'm looking for a higher time frame. I'm looking for a higher time frame exit. So that is the 4-hour swing low. And as you can see, let me just break this down for you guys even more. So last week, the market failed to go any lower, take out this low. And then it came higher. And some of you guys would think this is 50% where the market needs to come back down here. That is for sure a thing you guys want to be looking for when you guys are doing your entries. Always look for at least using a Fibonacci entry at 50% or lower. That is something my mentor has taught me. Just entering at equilibrium, as they call it. But if you look closely now, so we have a low right here, and then we got this high, we got this low, we got this high. So my 50% will actually be from this low to this high. You see, it doesn't have to come back all the way down here. I just use the swing points, and this is the low and this is the high. All right, and then I wasn't able to get the entry exactly at 50%, but all I need to see is the swing low taking out below 50%, if that makes sense. And some other things which I'm about to show you why I got into this trade on the lower time frame. So if you go to the 5-minute chart, so I can just go back to the 4-minute, 4 hour for a second, and break this down real good for you guys. Just want to mark off this level so you guys can see it clearly. red or burgundy. So that is sell side. That is what I'm looking for the market to take in order to get in. So now go to the 5-minute. So this is that low right. This is that level right here that we just marked on the chart, and you can see we swept it, and that is at 50% as well. We already did that on the higher time frame. I'm not gonna go over it again, but the swing low happened at 50%. All right, so this is where the market closed. So this is the close from last week, Friday. It's also the new week opening gap. New week opening gap is just where the market closed and where it opened for this week. So this is where it closed. This is where it opened. So that is the new week opening gap. But just for this explanation, I'm just going to mark it off as the close as well, because it is the close of last Friday. Just so you guys have a clear understanding of how I took this trade. And I could actually change the color so you guys could see what I'm doing. So that's the close, right, for Friday. And then we want to get the opening price at 9:30 when the market opened. So this is the opening price right here. Could lock that in actually. All right, so the market opened 9:30. Right at 9:30, the market push automatically just took off going lower. So what our traders gonna do? They're gonna think that the market is going lower, especially when they see such big candles. And one thing you guys never ever want to do is chase price. So say you guys see the market going down like this. Like I said before, you always want to enter at 50% on the retracement. So if say you were gonna take a short, your short trade, obviously 50%. You always want to make sure the market comes back to at least 50%. But for me, I'm not looking for shorts, so I wouldn't take that short trade. And the market just opened. So the market went down, and just before or during the macro, a macro is a move that happens 10 minutes at the end of the hour and 10 minutes at the beginning of the hour. So the morning macro would be 9:50 to 10:10. All right, so 9:50 to 10:10, that's where I'm looking to enter my trade. So just before the macro and during the macro, the market pushed down lower. And a lot of traders, they probably have like trades to go short. If it's like a breakout trader, they'll have shorts like say right here, and then they put their stop right here. So they're selling right here, putting their stops right here, breaking out right here, putting their stops above this high. Same thing in the opposite direction. Like there's traders that may have bought right here or somewhere around here and put their stop right here. So the market is gonna take those people out, take those traders out, as well as for the stops above here, they're going to want to run that as well. So during the macro, we run that low. Automatically, that's the entry right there. Could have entered right here. And also, if you go to the 15-minute, oh, it must be gone now. Thought there was a gap there. There's not a gap there. Thought there was a gap there. Anyways, so entry right here. And as soon as you enter, because it just took out the sell side liquidity, market takes off. And this is the opening range gap, as I just mentioned. If you guys find this video very valuable, please subscribe to the channel. If you're not already subscribed to the channel, make sure you leave comments down below and like the video as well. This helps me out build this channel up more, and it encourages me to make more videos like this. So this right here is the opening range gap, just so you guys have a clear picture. So market took off. So say if I was day trading, which I could have entered as I did right here, and then take profit at these highs, and that could have been done for the day. But me, I like to hold my trades for more profit. So as you can see, yesterday the market pretty much took out that high and then consolidated for the rest of the day, and then we closed right here. So this is where we are right now for today, which we had high impact news. I believe it was PPI or CPI, one of the two. We could check that out right now. So I like to just filter USD and highlight high impact and medium impact news, apply the filter. And yes, today we have PPI, so I knew the market would be taking off, as I'm about to show you in a bit. CPI, same thing tomorrow, and then Thursday, unemployment rates, bunch of high impact news for the week, so we should see a lot of movement. Another thing, if you guys are like, don't know when to expect high impact, don't know when to expect a lot of movement in the market, or when the market's gonna give you that big move, if you ever have a week like this, we have a small candle, just focus on the candle, don't even focus on the wick. We have a very small candle right here compared to the week before. So if you look at the calendar a week ahead even, and then you see that you had a small candle, the chances of you getting a lot of movement or a lot of range, the market taking up a lot of range, is highly based off of what the market did the previous week. It did a lot of movement, but it closed really small. So this week I'm expecting the market to have a really large range and close a lot of ground. Like I don't expect it to go up and then close short like it did this prior week. In the prior week, the same thing with the daily chart. if you guys are ever on the daily chart, when to expect big moves is when you see like small candles. Like all of this is just small candles. Granted, it was in consolidation, but you're still seeing a lot of small candles. And then eventually, the market gave you this big candle, then a big candle, then a small candle, then a big candle. So big moves usually happen after small candles. Right here, last prior week on a Tuesday, we had this really small candle and then a big candle. So that's definitely something you guys want to write down. Definitely something you guys want to look back and look at your charts and just study these things. That's the only way you're gonna develop as a trader, is just looking back at previous moves, previous price actions. Like how I was talking about the macro, the 950 1010 macro. Like look at your chart and see how often it does that. That's how you're gonna get better. Just look how often it will take out a low just before the 950 macro or right at the 950 macro, and say there is a big gap like how we had there, like I just showed you guys, and it closes in that gap, or it doesn't even really have to have a gap. If you guys just see it move in the opposite direction in which you guys believe the market is gonna go in, so like market movement, like market movement is pretty much, let me get this highlighter tool for you guys. So market movement, in order for it to go higher, it's gonna go lower. That's like basic, right? So if you know that, then if you know the market needs to pull back to go higher, then if you see that during a macro or just before a macro and it takes out a low and you enter at the macro, like during the macro, your trading will go to like another level. Your trading will go to another level. Like the study macros, I swear, like it's not even hidden. It's there on the charts. So back to today. So I already got that trade in for the week. All right, so this was the previous close. We could take that off because another thing, once the market closes the gap, like this is yesterday's close or whatever, the open and the close, once it closes it, that's something I just always take off. So I'll just delete that. That is a new week opening gap as well. Like I said. So today, the same thing, but after PPI for today was at 8:30, and the news doesn't even matter what type of impact it has on it. That the numbers don't matter to me. It doesn't matter at all. It's all manipulation to push price. So usually on a regular day like yesterday, the market, as you can see, will come back and it'll come back and fill in the gap. And just to let you guys know, so this is the Fibonacci in the quadrants. So this is yesterday's close and this is today's 9:30 opening price. If you take your Fibonacci and have 25%, 50%, 75%, these are quadrant levels. The market is usually like on a regular day with no high impact news like PPI, CPI, non-farm payroll, those type of days, like the market 9 times out of 10 will want to fill in the gap somewhat. It doesn't have to fill it in all the way. Hold on 1 second. Still got this opening price on here. Yeah, this is yesterday's opening. Take that off. So yeah, so 9 times out of 10 the market will want to close in that gap. But days like this, like PPI, it does not need a I've been in so many trades where like I'm thinking the market needs to close it in the gap. I'm waiting for it to close in the gap. It won't close in the gap. The most it would do is hit the top of the gap, like the opening. It doesn't have to close it in. Not even at lunch. It doesn't have to close it in at all during lunch. So that is something you guys need to like study opening range gaps where the market closed yesterday. So if you're on a 5 minute, just put a candle, a line on the 4:55 p.m. candle where it closed. I think that's actually the opening. Yeah, because this is a down close candle, so just to make sure, close. Yeah, so the close is actually down here. Yeah, so where was I? Yeah, study the opening range when you have a gap. Study it, study how the macros react to it, study if there's a low and how the macro reacts to taking out that low in the morning if you want to be a day trader. But for me, I simply, like I said, look for a run on a previous day low to get in the trade for the week. So yeah, so this is opening gap, and maybe make this a lot more clear for you guys so you guys can see it once again. This whole range, opening range gap from when it closed yesterday to where it opened at 9:30. So you want to study how it reacts after 9:30 and how it reacts during the macro, where we didn't really get any movement during the macro. It just came back, filled in this gap a bit, and then after the macro, it hit this opening and then continued to take off. So that's PPI. Like, don't expect what you expect on days like this. That's the main thing you could get from this lesson is don't expect what you expect on high impact news days, high impact news drivers like PPI, CPI, non-farm payroll, non-farm. All right, so you guys study your charts and you guys will be good. So this thing is on a tear right now. And don't worry about the dollar amount. You guys just focus on trading properly. I swear, man, you guys will eventually get it. So next thing I want to just highlight is yesterday and today this morning, the market made these lows. I don't really like lows like this. It's like so clean. Call this relative equal lows where the market makes equal lows. We have it right here and we also have it down here. So that is also a telltale sign. At some point, the market is going to want to come back and take out these lows. It doesn't have to happen this week or next week could happen at any time. But that is definitely something I would look to target once the market is going back short. So that's easy. Like, that's something really simple you guys could look for. You know, is mark off your charts. Though, if you don't know where the market is going or you don't know where to exit your trades at, just look for things like this, where you see like relative equal lows. So for me, we talked about the entry. Let's talk about the exit. So we have this gap right here. See, these are places where you could easily like take profit or take something off. For me, I like to really squeeze the trade, and seeing that we have high impact news all week and we have this big gap up here. Take this off. This is definitely where I'll be looking to take some profit in this gap right here. So that's where you could take profit. And we have this previous new week opening gap where the market gapped open for the new day. So it closed up here, but it opened the following day lower. And as you can see, this was an easy trade too that I took. Just taking a short right here. And obviously, like I said, you could just trade at 50%. So even if you were to take a short right here at 50%, you don't have to put like your full trade on. You could put like a small position and then say it comes up to here, because it doesn't always have to fill these gaps in, but it just so happened it did. But just be aware of things like this, and then you could put it on your full position right here and then watch the market tear. Like I said, if you study it, the 4-hour candle, let's show you guys that I'm not lying about this thing. I'm giving you guys so much right now. So if you guys enjoy this information, find it valuable, please once again just subscribe to the channel, like, and comment down below. So and I even marked it off, as you can see. So Friday we had this swing high, and then on Sunday we ran it, and that's where I went short, and I also went short right here. So I could actually show you guys. So yeah, that is Market Making Monday, episode 25. Technical Trading Tuesday. That's something new I just made up. And hope you guys enjoyed this video. Comment down below, let me know what you guys think, and I hope you guys enjoy the rest of y'all day, y'all week, and just take your time with y'all charts and your trading. And I hope you guys all the success this week, and I am out. Peace.